Welcome back. Stocks, you see, under some pressure this morning. Gold moving higher yet again, firmly above $5,000 an ounce, and it is up more than 75% just over the last year. Our next guest says gold is now divorced from fundamentals, but it's hard to see what might stop its ascent. Joining us now is Rockefeller International Chairman and Breakout Capital founder Ruchir Sharma. Good to have you. I guess let's start on gold, since I introduced you that way. As we continue to watch its ascent, what do you make of it, and when does it stop?
Yeah, David, that's the point, which is that I've been quite bullish on gold for many years, but what I have to admit, given the parabolic price action of the last few months, is that it is totally disconnected from any fundamental story, which is that what drove gold historically, there were factors such as real interest rates, inflation surprises, and also of late, since 2023, central bank purchases looking to diversify outside of the US dollar. All those factors have slowed down or can't explain what's happened to the price of gold over the past few months. It's being driven entirely by financial flows with massive ETF buying that's going on. And people are coming up with all sorts of stories to say why gold should be going up. For some people, it's dollar debasement. Other people, it's the US deficit. Other people, it's the uncertainty unleashed by the Trump administration. And yet what's unique about gold is that all other assets don't reflect any of this kind of risk premium. That if you look at US bond yields, they're relatively stable. The dollar has also been stable last few months. And also the fact that Bitcoin, which was seen as this big alternative to the US dollar, that's been tanking. So this is a very unique phenomenon. And it just is one of those things, which is we saw this in the late 1970s as well, that beyond a point, these momentum trades just get so powerful that they keep going, and people keep coming up with all individual stories to justify the prices. So I think even here that gold keeps going until you have a catalyst in the other direction. In the late 1970s, it was interest rates that finally broke the back of the gold rally when you got a massive increase in real interest rates. I just don't see that happening. So we're caught in this sort of very strange situation with no fundamental backing to the price of gold, but yet nothing to stop its momentum.
Yeah, you mentioned interestingly the corollary or negative correlation between gold and Bitcoin, which is not what Bitcoin fans want to see, since for how many years did we hear Ruchir it was digital gold? It doesn't seem like it's behaving that way.
Yeah, exactly. So I think that this has become very unique to gold, but yeah, it's spreading to other commodities though. So I think that one thing which I've been telling some of our clients as well is to diversify by buying other commodities, which is that usually when gold does well, it tends to drag other commodities out. So I would spread the love a bit by buying other commodities in a portfolio and increasing the commodity allocation. But I understand that gold, still seems like the risk is to the upside rather than the downside from here, at least in the near term.